Heute werfen wir einen Blick in das Jahr 2025, also genauer gesagt auf die Frage, wie du dein Portfolio im kommenden Jahr ausrichten solltest. Und dazu habe ich mir Paul Jackson, den Global Head of Asset Allocation Research vom Investment Manager Invesco eingeladen. Wir sprechen über die Politik von Donald Trump, die uns im nächsten Jahr erwarten wird, ob China-Aktien, Emerging Markets oder auch Small Caps dein Portfolio bereichern sollten und welche Rolle Gold im nächsten Jahr spielen wird. Also wenn sich dieses Thema interessiert, dann solltest du dir den Talk unbedingt anschauen. Viel Spaß!
Hello, Paul. It's really good to have you here in Munich in our studio. You come from London, traveled here to Munich today. The weather was so la. It starts snowing here in Munich, but I'm glad you made it and also on time. I was already a little bit late.
Yeah, no, it's fine. Everything went well. It was very cold in the UK. We've had a bit of snow. I was expecting a lot of rain here. That was what the forecast was.
Yeah, yesterday it was raining, but today.
So anyway, it was good to arrive and always good to be in Munich.
That's good. That's very good. And the topic of today is the big picture 2025. And before we start with the next year, I just want to have a short look at the current year, because this year the capital markets development was generally overall pretty good. We had good stock markets performance, we had cryptocurrency, we had bonds, we had gold. So almost everything goes up. Was it a surprise for you?
Yes and no. A year ago, when we were looking ahead to 2024, we were predicting the best returns across assets that we had seen for a number of years. So it's not a surprise that asset returns have been good, but I would say they have been a lot better than I expected. So I think things have gone beyond what we were forecasting 12 months ago.
Yeah, I can show a picture of the development of the relevant asset classes beginning of 2010. And is there a pattern visible? No, I would not say there's a pattern. It looks pretty random.
No, I describe this as my brick wall chart, and it is. Things oscillate. Some years, some assets do well. Other years, they don't do so well. But in 2024, as you can see, the pattern has been quite similar to 2023. Gold is at the top of the league table so far, with stocks behind. And last year, those were the two top performing asset categories as well. The gains in gold were extraordinary during 2024, especially when they followed strong gains in the previous year.
Yeah, especially when the interest rate comes down, it gave another push on the gold price.
Yes, but I think actually the main factor this year has been geopolitical tensions. Because if you think about it, bond yields actually haven't moved a great deal in the last year. The dollar has gone up, and normally those two factors taken together would probably depress gold. But what has been very clear has been that the speculative positioning or the net open interest position on major gold futures exchanges has been at record levels throughout this year. So for me personally, I think that has really been the factor that has driven gold higher, particularly with the situation in the Middle East.
Central banks buying gold, I would say retail investor also buying gold. Is it a lack of trust to the traditional finance system?
Well, I think on the central bank side, first of all, it's natural over time that central banks will buy gold as a part of their reserves. And as the reserves grow over time, they do need to buy gold. But what we have seen in recent years was a big step up in the amount of gold that central banks were buying. And obviously that happened in 2022. The big beast in the room was anonymous, but I think everybody agrees that it was Russia buying gold. And what was interesting there, of course, is that Russia is doing that to get away from the dollar-based financing system. So Russia had this incentive because of all the sanctions that were being imposed on it. It had a great incentive to buy gold and get rid of other assets that maybe could have been sanctioned. Since then, there has been a leveling out of purchases by central banks, but I would say a diversification. There's been a broader range of purchases, and China has become, I would say, a more consistent, sizable purchaser of gold in the last few years.
Will this continue in the next year? So if is gold still an investment where you can put in a diversified portfolio? We come later to the whole diversification topic, but particular to gold, or is it more like a insurance for major crisis or something like that?
It's an interesting topic. First of all, I think that you can buy it as insurance just in case things go wrong. You maybe also could be interested in the perhaps low correlation versus other assets, which does give you some diversification. The thing that concerns me at the moment is just that the price has gone so high, and when you look at it in real terms, it's at record levels. Certainly for the 150 years worth of data that I have, gold has never been this expensive. So I think there's a lot of, we usually say for assets, there's a lot of good news in the price. I think for gold, there's a lot of bad news in the price that has driven the price higher. So I'm a little bit concerned that we can't continue to see the sorts of gains that we have seen in recent years. And you have to remember, when you're looking at gold within a portfolio, that it's a very volatile asset. It's as volatile as equities. So if you have gold in your portfolio for the reasons that I outlined, you also have to accept that it will come with quite a bit of volatility.
Some will switch to silver maybe, because silver, everybody is expecting that silver goes also up and follows the gold price. But it doesn't had a so good performance. In the last couple of weeks, yes, but in general, everybody is thinking it's going up much higher than it is now.
Yeah, I think the arbitrage between gold and silver is quite a kind of a recurrent trade. So when gold has done very well, gold is always the first port of call. It's a bigger market, there's more gold. But then eventually when gold goes up a lot, people notice that the ratio between silver and gold has gone down, and then they start buying silver. That, of course, relies on the idea that gold will stay high and that silver catches up. The problem is if gold goes down and then silver just doesn't go anywhere and maybe could go down as well.
When I looked through your graphic with the asset classes, is this just a selection of asset classes? Or is it the relevant asset classes for you? Because I was missing, for example, cryptocurrency. Cryptocurrency, is it an asset class or not? How is your view on that topic? Because it would stay above gold in terms of performance, Bitcoin at least.
Yeah. This selection of assets is by and large the assets that I consider within my asset allocation framework. And an important element, in fact, the only asset that is missing from there that I have in the framework is bank loans. But an important requirement for an asset to be included in my framework is that I can actually analyze it, and that there is data that allows me to sort of have some sort of model that explains why an asset behaves the way that it does. And I just can't do that for cryptocurrencies. First of all, there's not a long enough data history. Secondly, I struggle to explain what fundamentally is driving, apart from the greater fool theory, which is basically that there's always going to be somebody else who will buy it from a higher price, but you can never explain what it is really that you're getting. So for me this year, yes, there's been a lot of speculative activity in the same way that I think there has been in gold. So I think cryptocurrencies have benefited from that. And we've had the recent boost coming from the results of the US election. But at the end of the day, I still can't explain to somebody, well, here's what you're going to get if you buy a cryptocurrency.
A lot of zeros and ones. No, I don't want to bother you with cryptocurrency. I just thought I must ask you because if it's a list of different performances, then cryptocurrency would be also suitable. The main topic of today is the outlook. And the outlook for next year is, I would say, mainly driven by Donald Trump and the Republican Party. So they start, I think, in January in the government. And we have also a special situation in Germany right now. I think these two topics are maybe the main driver for the next year capital markets development. Do you think it is like that?
Not really. What I would say is that politics and geopolitics can have periodic influences, but usually the big driver of asset returns and the relative asset returns is what's happening in the economic cycle, what central banks are doing, and yes, what governments do can impact the economic cycle. And with the US government, if it's doing radical things, it can impact the global economy. But usually I would say there are much bigger forces at work that have much more impact on the returns that we're going to achieve. So I think that we have to be alert to what Donald Trump's administration may do, and there may be some good things. And I think the markets are reflecting the good things, or what they think are the good things. There seems to be relatively little attention paid to the risks at the moment. And so I think you have to look on both sides. But more important for me is, what is the Fed going to be doing? What are other central banks around the world going to be doing? And will we get more growth in 2025?
I'm wondering regarding Donald Trump and all these activities and announcements they did with Elon Musk and all that stuff. Is it realistic that they can change something, or will they change something? And because I think sometimes the experts or also other political parties don't believe that they will change much, because the system is so strong and the organization within the government is so strong that they cannot change so much. But do you think it is realistic that not so much is changed, or are they really capable to change things as they told? Because then it would be a surprise maybe for the capital markets, because everybody's saying, so, I'm focused more on the economy development. But when they really do some fundamental change in terms of government spending or optimization from the spendings or whatever they have plans, or shut down the economy in terms of close the economy for foreign products with the tariffs and all that kind of announcements, does this not affect then increasingly also the other economies?
First of all, yes, they can make changes. We saw during Donald Trump's first term in office that he made a range of changes. First of all, something that impacts the world, taking the US out of the Paris Agreement on climate change. So that has an effect on everybody. He will encourage the exploitation of oil and gas resources and coal, I guess, as well, which in the long term will have an effect on everybody, but can have an effect on certain sectors. And if he's successful in getting more oil and gas output in the US, that will drive down the price of those commodities. And we did see during his first term that, yes, he did impose tariffs. There were a range of trade restrictions imposed against China, against Europe, against his NAFTA partners. So I think he is capable of doing those things. And on the tariffs question, and the US, as you suggested, the US kind of withdrawing in on itself and becoming more isolationist, that I think it's a bad thing for the world, it's a bad thing for the US economy. Basically, we gain from trade. It's very simple economic theory, and I think it's true. It's better to focus on the things that you are relatively good at where you have a comparative advantage rather than trying to do everything. Everybody gets a more efficient outcome. We get more products at lower prices. So if you then move to a world where there is less trade going on, you are making everybody suffer. And the US economy, at the end of the day, they may think that they're penalizing China and Europe or whoever, but at the end of the day, it's the US that will suffer because, number one, their consumers will be denied of the best alternatives. They will have to pay higher prices. And at the end of the day, their industry will be less competitive because they don't have the competitive force imposed on
to
them.
optimize their own production lines and everything.
So they can become lazy. And so it's not good. So they can do that. Now, you asked specifically about government spending. I'm a bit more skeptical there. I think it's one thing to buy a company like Twitter and reduce the headcount. And I think a lot of people would say that the service has been reduced, that it's not what it used to be.
But it's still there. The company is still there.
It's still there. But if you are in government and you try to adopt that same approach and you degrade services and you degrade the way that the government is working for people, then you won't go very far. But also, the governments around the world are a bit like steamrollers, these kind of heavy machinery that flattens roads. They kind of have a momentum and they keep going. And you can try to change the direction, but actually the thing just keeps chugging along. And so I think that Elon Musk will find it, for him, surprisingly difficult to effect that change. And I suspect he may become frustrated by that process. So on the fiscal side, if he manages to reduce spending by the $2 trillion that he has suggested, then great. We don't need to worry about unfunded tax cuts, which I think is a concern at the moment. But if he doesn't succeed, then you're going to get tax cuts, a widening of the fiscal deficit, and nothing that is going to offset that. So that for me is a concern. I think clearly they can change some things, but other things I don't think they can change.
Okay. Yeah, interesting. Thanks for your opinion on that. When we come back to the real world, let me say, the inflation come down, the interest rates come down, so the central banks are active. Does this has a new input on the development of the economies, or what kind of input does it have? Is it a good thing, bad thing?
I think you can see from the chart that central bank interest rates have peaked, and 2024 was really the turning point when central banks started cutting rates. And I've counted around 60 central banks that have reduced interest rates this year. So we're very much now on the downward leg of the interest rate cycle. And the reason they've been able to do that, as you can see from the chart, is that inflation has come down. This chart is showing you central bank interest rates and inflation across the 20 largest economies through time. And inflation came down, it went up a lot, but has come down, and central bank interest rates are now higher than the rate of inflation. So the real rate is positive, and that's creating the room for the central bank rates to come down. So I think that is going to continue into 2025, and it will be, I think, one of the reasons why economies will accelerate. This year, I would say the global economy has been lackluster, and you can see that from the behavior of commodities prices. The price of oil, despite attempts by OPEC and Russia to restrict supply, the price of oil has gone nowhere in the face of geopolitical tensions in the Middle East. Copper has really gone nowhere and has been quite weak recently. And that suggests to me that the global economy isn't growing fast enough to create the demand for these commodities to keep the prices where they were, and let alone have them going higher. So I think the global economy has been quite lackluster. But now that inflation has come down and real spending power is going up, and that central banks are cutting interest rates, I think there's a good chance that in 2025 we see more growth than we have seen this
How
year.
low can the interest rates go? Are we seeing negative interest rates again?
I hope not, because if we see negative interest rates, that means the world is really in a mess. So no, I hope that we have left behind that period of our history. And if I look at the Federal Reserve, for example, in the US, today the policy rate is 4.75%. It peaked at 5.5. So it's already come down 75 basis points. For me, over time, over the course of a number of economic cycles, the normal rate for the Fed will be maybe 3.5 to 4%. So rates,
Not so much space.
rates can come down maybe another 100, 125 basis points, but they're not going to zero.
And particular, you talked before about the development of the economies and US and others. How is your view on the German economy? Because in Europe, Germany has not such a good development right now. Political problems also now.
Yeah.
How do you see the development of the German market?
Yeah, I think the weakness of the German economy has surprised a lot of people. So there's a lot of sort of after the event explaining going on. But I did a comparison between the German and the US economies, and actually up to the point of the pandemic, up to 2019, the German economy, although it grew less rapidly than the US economy, when you look at it on a per capita basis, the growth rates were very similar so far this century. But what has happened since the start of the pandemic is that both governments gave a lot of support to their economies. They put money into people's pockets and into the pockets of businesses. But the US went much further than Germany, and the US has continued increasing government debt. So it's continued to support the economy, whereas the German government has consolidated its debt back down to levels. Debt to GDP is now below where it was in 2019. In the US, it's just continued going up. So the German government hasn't provided the support that the US government has. But also the US consumer had big excess savings because of the generosity of the US government. There were excess savings in Germany, not quite as high. The excess savings have disappeared in both places, but the US consumer has now pushed the savings rate down to pretty much record low levels, whereas in Germany they've stayed at, I would say, around about historical norms. So those reasons of sort of government largesse and consumers in the US willing to push the savings rate so low are probably why the US has outperformed Germany. Now, there are very specific factors in Europe and some that are particularly acute for Germany. One, of course, is Russia's invasion of Ukraine, which led to this energy crisis in Europe. And Germany, along with other countries, but I think Germany in particular, got itself into a very weak strategic position, relying on Russian gas. And so the rise in the price of European natural gas, I think, had a more severe impact in Germany because of the reliance on that gas. And then there has been the question of China with, I think the Chinese economy is still growing okay, actually, but it's certainly not growing at the rates that we have become used to. And so that weakening, and maybe the weakening of the consumer in China, has perhaps had a disproportionate effect on Germany, because Germany had got itself into a very good position in terms of doing trade with China, but that has turned into a bit of a handicap. So looking ahead, Germany, like everywhere, will benefit. Everywhere within the Eurozone will benefit from the decline in ECB interest rates. I think it will benefit from the decline in inflation, which is boosting real incomes. And so I think the German economy will accelerate into next year, so you'll see more growth. But for the moment, there is the political uncertainty, and that may provide a bit of a dampening effect.
I think the sentiment in Germany is not so good right now. You mentioned already the government, but also you don't hear so less success stories about Germany. So, for example, AI, not really relevant. We have the problems in other sectors also. We have no really strong banking sector if you compare it, for example, to the US or other countries. And that's maybe the reason, and the problems with the automobile industry is also not a good sentiment in terms of if you look in the future right now in Germany, there's missing some points where you can say, oh, that's a good development, and now I spend my money for whatever I want because I believe that in the next couple months or years it will be better. And that's confidence is not there, I think, or not so strong right now. And that's a major part, if I understand right, which could support the economy in Germany.
Yeah, I mean, I would say a couple of things. I think that confidence is not good. Sentiment is not good in most countries. If you look at the elections that have taken place this year, in most of them there has been a change in government. The incumbent has been punished. Because although we can say inflation's come down, growth is okay, unemployment is low, the average person in the street is not feeling that. The average person in the street is feeling that they are actually still struggling. So yes, I think the average person in the street is really feeling as though they're struggling and sentiment is quite low. And so I don't think that's necessarily any different in Germany, but I understand what you're saying about let's say the industrial structure of Germany. Germany's economy was brilliantly positioned for the economy of yesterday, and is maybe not so well positioned for the economy of tomorrow. And you mentioned the auto sector, and it's a case in point that the auto sector in Germany, although when I go to China, if I go to Beijing, I see lots of German brands, lots of German brands being driven around Beijing, probably manufactured in China, but German brands nonetheless. I was at a presentation recently of a Chinese electric vehicle manufacturer where they basically, most of their design is done in Germany.
Oh, really?
But the German auto manufacturers have been overtaken when it comes to electric vehicles. So if we were staying in a world where everything was powered by diesel and petrol, the German auto industry would be in a good place. But Chinese manufacturers decided to focus on electric vehicles. They said, we can't compete with the Germans, we can't compete with the Japanese.
But it's harder to transform a business besides just build from the scratch.
Exactly. And so when it comes to electric vehicles, Chinese manufacturers are making great inroads. And by the way, providing us with the vehicles that we need at much more acceptable prices. And they're good cars. Everybody I know who's driven them say, that they're great. And my experience in China, I had a few days in Beijing and Shanghai, and being in cars that were Chinese brands, they were good. So it's not that they're giving us really poor quality vehicles for a low price. They're a good quality at a low price, but we potentially are being denied the opportunity to buy those vehicles because tariffs are going to be imposed, but it's what we need. Now, it may take a little while for Germany to adapt, but I do have faith that eventually Germany will reinvent itself and, let's say, move into the 21st century, and maybe with more of a focus on new technologies. The banking sector has been an issue for a long time. It does need, I think, a lot of consolidation and change.
So you see, we have the chance to change the economy in the right way, but it takes a long time.
It takes time.
Yeah. Okay. Is it different with other countries in Europe? Because the problem itself should be the same, but the spending of the other countries like France, Italy or the deficits are much higher than the German. In some cases, maybe you should also spend more money to give the economy in Germany a push and don't focus too much on the Schuldenbremse. What do you think? Is it a good thing to focus on, let me say, the costs and the debt, or is it maybe better to invest more money?
Yeah, I think making the comparison across Europe, most European countries suffer, first of all, from weaker demographics than the US. The UK, where the demographics are better than in Germany, but nonetheless not as good as in the US. In the UK, we have some of similar problems, that we're not a world leader in things like artificial intelligence. So we, or the new government in the UK, is trying to make efforts to improve, I would say, the fabric of the UK economy, investing in infrastructure, trying to encourage investments that will help with the mitigation of climate change, and so bring those sorts of industries to us. And yes, I think Germany perhaps could do that. I think the good news for Germany is that you have controlled the debt, government debt, much better than in other countries. And as a result, there is more scope for using for the government to encourage a change, to encourage more investment in the industries of the future.
But this would mean also that the government must be willing to go in that direction. Right now, it doesn't seem, with the old government, we don't know what's the new government, how it will look like, and what how they will develop their country. But if you don't have a government who really want to change something and want to invest in the future, and I don't know, go with an optimistic approach in this phase, then it's hard, and it's more like you don't risk anything. Everything keeps as it is, and just wait and see what's happened.
Yeah, I think eventually that's not tenable, and I think there are enough people out there that can see and can say things exactly the way that you said it, about the lack of presence in sort of the more important industries for the future. One of the problems, of course, is that we don't really know what those important industries will be. For the moment, it's all artificial intelligence. A few years ago, it was the metaverse, and nothing really came of that. So it's hard for governments to identify the industries that they should be in. But like the UK, Germany has done a good job of decarbonising the production of electricity. Both the UK and Germany, when you look at their electricity production, it's somewhere between 40 and 50% of it is from renewable sources. And so I think those sorts of areas we do know that we are going to need for a long time. So those are areas that obviously can be focused upon. But there is maybe also things that, like in the transportation system. I think it's become a bit of a joke now. But if you travel on German trains, for me, it's what I would expect in the UK, or what we used to expect in the UK. And the German train system is no longer as reliable as it used to be. And so there can be investment in infrastructure and in those systems that I think can also help the performance of the economy.
But if you compare Europe in general with the US and China, you see, it seems as from our perspective that these countries, not related to the governments, are strong. They have a development. They are in their relevant techniques active. They have market leader or big player in that area. And in Europe, we don't have a big online store like Amazon. We don't have a computer system like Microsoft. We don't have cloud services also in Amazon. We don't have AI. We don't have a market leader in electric cars. You know what I mean? So is there any room for us in Europe in general to emerge with one of these kind of players? Because I don't see it. Where should it come? Because the people who has good knowledge in that areas which are relevant, they maybe go to the US because they got more funding when they start a company. Their relation is maybe less. So that depends. That needs such a big effort to change everything and build a play field for these companies in general to emerge.
Well, you started off asking about the US and China, and of course there are two different models. In China, it's much more, I would say, the government dictating. But there's there's private enterprise there, but I think there's much more of the government having targets and aligning, as we say in English, putting all the ducks in a row.
But in terms of electric vehicles, it seems to work.
Yes.
Focus, make a decision, execute, support everything.
Absolutely. And so that model has worked there. And before electric vehicles, it was solar.
For example.
Solar industry, the world leader in solar panels. And I think that China will incrementally become a global leader in an increasing number of industries. And it has, importantly, it's got a big domestic market, which is always a big help. And that's one thing that has helped the US when you look at US companies.
But Europe in general has also a big market, but it's not, they don't speak with one language. They have too many different rules and regulations. It's not finished. It would be much better if Europe would be really one area or one country or one government, for example. Which is not obviously
going to happen. But the US is, the development of tech companies in the US is I was going to say, it's much more of a private sector phenomenon. Not entirely, because a lot of the development of technology in the US has sprung from defense spending and the encouragement of defense spending. And you mentioned Tesla. I'm not mistaken in saying that Tesla relies quite a lot around the world on finance from governments. There's always some deal to be struck somewhere. And so the government in the US has been quite important because of the developments that have come from defense and the space program. And that they have sort of moved over into the private sector. But also, again, you've got this hub of expertise or financing expertise in California, and this hub of tech expertise in California, which helps, although people are moving, kind of spreading out a bit. But also, the fact that they do have a big domestic market where they can initially sell their stuff and they get strength. And that's where the American banks got their strength as well. A lot of capital in the US. And so once you build up and you get to a strong position, you can then go out to the rest of the world. So that is something that perhaps Germany and individual European countries lack, is that size. But as you rightly say, Europe as a whole is bigger than the US. It's obviously not as big as China, but the population is bigger than the US. So if you can properly leverage the European market, then you could do that. But again, as you say, you run into language. There's always the language issues. So if you're developing apps or tools, IT tools, then you probably need to cater for each individual language.
We started with our website last year in Italy, Spain, France, and Austria. But Austria and Switzerland, we develop it in German. But it's difficult.
My granddaughters are learning Swiss German. They live in Zurich, so they're learning Swiss German at the moment. And so I sort of have to. I know a little bit of German, so I have to adapt for Swiss German. So it's not 100% overlap.
But coming back to Europe, that's a strategic advantage on one side, because we have a strong union of different countries. But on the other side, it is also a problem because it is not one region. So on paper, it's wrapped, and we have big numbers of citizens. We have a strong economy in the wrap, but it's in the realistic. It is really hard to develop your business in different countries. And the other countries, so US, for example, or China or India, they don't have this kind of problems.
Yeah, but I come back to the basic point that Europe runs a current account surplus. Mm-hmm. So it's selling its goods and services somewhere in the world. And the US has a current account deficit. Mm-hmm. So it's not able to supply all of its requirements. European countries, France has got a number of world-leading companies. And it was quite surprising, having lived in France for 10 years and seeing that the bureaucracy, it always amazes me that they can have successful companies. Germany has had and still has world-leading companies in some sectors. And I think the technical and engineering expertise in Germany, I think that does stand it in good stead for the future. The technical, the application of those technical skills maybe changes, but having those technical skills, I think, is important. And so I think, if you look at the basic education system in Europe, I think the outcomes and what is being taught to young people is better than what you see in the US and in the UK. So leveraging those skills, I think it is possible to still imagine world-leading companies and world-leading industries. There's maybe in Germany there was just there had been too much of a good thing, and so maybe the country became lazy and always thought that what has succeeded in the recent past and what is succeeding now will always succeed, and then it hasn't necessarily turned out that way. But I'm sure that there is the wherewithal to make those transitions. Where Europe, I think, does have a big advantage is, again, on the climate change side of things, and the development and adaptation or adoption of relevant technologies to help mitigate climate change. And somewhere like the Netherlands, the adaptation strategies as well, defending against rising sea levels. There are good pockets of expertise in these industries. The UK is a world leader when it comes to offshore wind. If we can properly leverage these things, then I think we can have a viable future in what are going to be very important industries for the coming years. Who cares how big you make the number 5 on the keypad of a phone? It's almost it's really technology that is really not that important at the end of the day. When it comes to climate change, it is critical. It's really important.
Yeah, or everything when it comes to moving goods from one point to the other, it's also important. Because I think sometimes in the financial industry, you just look at numbers and performance of stocks and the stories of stocks, for example, Tesla or whatever. But at the end, you need someone who produces a product. For that product, he needs resources. The resources must ship from one place to the other, then must be produced, then must be sold and maybe consumed. And this basic economy workflow, let me say it like that, sometimes it's not in that focus because everything is thinking digital. Yeah. But at the end, we all must eat or wear clothes or whatever must be produced. Yeah. I was a little bit pessimistic, but I want to take the chance because the good thing is if you interview someone from another country and you're from Great Britain, then you have the chance to double check the view from foreigners to your country. So I was more in a pessimistic situation right now. When we look in the next year, and that was the main topic, which asset classes do you think should be more in the focus. I give you some highlight, or want to highlight some things, emerging markets, for example, or small caps, because I did a couple of videos in the last couple of months regarding small caps, and because we find out that our users don't have so much small caps in the portfolio, they are mainly focusing on MSCI World products and something like that. And is that now a good time to buy small caps, for example? Emerging markets is also a missing piece in the portfolio. Bonds are totally missed in the portfolio because retail investors normally invest for the long term, and then most of them pick stocks for wealth creation. But now the interest rates are back in general, so are bonds, and there are different types. All asset classes you must have in the portfolio.
Well, I think coming back to the changing situation in the US, for example, and the geopolitical instability, I think that suggests that we may get periods of volatility in the next year. So yes, diversification probably is a good thing. The assets that I think provide for the next year an interesting opportunity are, first of all, bank loans, which may not be of interest to the average retail investor.
That's bonds from banks, or no? That's a certain. I don't know if it's possible to invest via an ETF in bank loans.
Yeah, it is more difficult in Europe, and I think for retail investors, it may not be something that they come across. But no, these are basically securitized loans. In the old days, banks would give loans to companies. And then an investment bank would come along and say, we'll take those loans off you and then rebundle them and sell them to other people. So they're also known as leveraged loans or...
all the good stuff.
Yes, but it's actually quite a defensive asset class. When you look at the volatility, it's like investment grade. So, but the interesting thing is that the current yield is very high still at the moment, and so I think the potential return, certainly versus the risk involved, is good. But I mentioned investment grade. I think investment grade is also so investment grade corporate debt is of interest. The spreads are narrower than usual, but I think that relative to government bonds, if I'm looking at bonds across the world, I would prefer investment grade credit to government bonds amongst that universe. High yield bonds the spreads are really tight. And so I think there's a lot of good news in there. Usually the spread is tight when economies are very strong. So I would say that if economies do recover, it's already built in. So although within my model asset allocation, I've recently added to high yield, I'm still remaining underweight. So I would say amongst bonds, probably investment grade. And across regions, I'm overweight emerging markets. So both investment grade and government bonds. Just because I think that the spread is still relatively interesting on emerging market debt versus debt elsewhere. The other sort of going to investment grade is relatively low volatility, and it actually, if you look at the chart showing my projected returns over the next year, you can see the series of bubbles there. And at the lowest volatility end is cash. So cash has very little volatility. And at the higher volatility end, over towards the right of the chart, is commodities. But I think that 2025 could be interesting for commodities, particularly industrial commodities, things like energy and base metals, because the prices haven't really gone up this year. I was talking earlier about oil and copper. The prices really haven't gone up, whereas other cyclical assets have done quite well: equities, high yield, real estate. So for me, these industrial commodities could be perhaps a cheaper way of getting exposure to the economic upswing. So I quite like commodities now. I'm at the maximum exposure to commodities within my asset allocation. But coming back to equities, There is a problem for equities. So, in general,
What is the problem?
well, I would say, first of all, before the problem, a year after the US election, usually you get good returns. When the Fed is easing in the first year, if there's no recession, you tend to get good equity returns. So, and we've got an accelerating economy in my scenario, so all of that is good, great for stocks. The problem is that I think quite a bit of that is in the price already. And if you look at the valuation of US equities, and you mentioned MSCI World, the US market is, I believe, around 70% of that index, so it's a big chunk. So if you look at this chart, which is showing the Shiller PE ratio for the US market, and it goes back to the 1880s, the US market is literally as expensive as it has ever been. It's pretty much got back to where it was during the internet bubble. But the chart also shows you at any moment the return on US equities in the following 10 years. And that is inverted. And it shows that there's actually a reasonable inverse relationship between valuations and future returns. Surprisingly, if you buy an asset when it is low, you get better returns than if you buy when it's high. So it's coming back to the old idea, buy low, sell high. If you're buying the US market at the moment, if you're buying a market capitalization weighted index for US equities at the moment, you're being forced to buy an expensive asset. And
Solutions would be then, for example, equal weighted indices, so that the risk is a little bit reduced from the big companies.
There are a number of solutions. One is go equal weighted. So, for example, something like the S&P 500, you then just have the same investment in each of those 500 companies.
Problem is a little bit that you have a very high transaction cost in these kind of indices.
But
it's always
but I think if you, I'm not an expert on ETFs, but if you look at the performance of equally weighted strategies and ETFs versus market cap weighted, for sure in the last few years the market cap weighted has outperformed. But over the fullness of time, the equally weighted I think has pretty good performance with lower volatility than the market cap weighted alternative. So I think at the moment that the issue basically in the US, you mentioned concentration earlier, that the issue is concentration, and that translates whether you look at the US market by itself or whether you look at MSCI World. We are pretty much at a peak in concentration. If you can see from this chart, if you look at concentration in MSCI World, so it's the weighting of the 10 largest companies within what is a 1,400 company index. The 10 largest companies account for somewhere around 22-23% of the full index. So they've got a massive weighting, and it's even more exaggerated in the US. And what you see over time is that those extreme peaks in concentration never last. And actually, what happens is that if you look at the next 10 years, where are those 10 companies that now dominate? Where are they 10 years hence?
It changes.
The concentration comes down.
But I think it's so hard to believe. We already talked about the dominance of tech companies in the US or China. And if you look at these companies, and for example, if you take Apple, yes, has competitors for sure, but they have such a strong position and a strong ecosystem. It is not so easy to go away. If you use an iPhone, for example, or use a Mac or something like that, you will keep in the ecosystem. And why should this good development of the share not also take place in the past? And I think that's the problem with retail investors who say, okay, I have an MSCI World. I know I have an overweight. I have overweighted American stocks. I know I have an overweight in the top 10 holdings. But these particular 10 holdings are in their segments market leaders, and there's almost nobody in the world who can compete them.
Well, first of all, I'm going to quote George Harrison. So the Beatles guitarist.
Okay, yeah.
George Harrison
Yeah.
from the Beatles, the guitarist. When the Beatles split up, his first solo album, I think, was probably the best work that any of the Beatles did as solo artists. And it was called All Things Must Pass. And that's true. All things do pass. Nothing ever stays the way that it is. We've spoken about the German economy and how it's kind of got locked in its ways. It was very successful and maybe not so successful for the world that we're looking at in the future. When you look at stocks, if you take a look at this table that shows you the 10 companies that dominated MSCI World at different moments historically when we had peaks in concentration, you look at those lists of 10 companies going back to the 1970s, and in a lot of cases you basically say, where are they now? So for example, in the 1980s and early 1990s, Japanese banks were dominant. And then Japan is always going to dominate. The Japanese have found the magic potion. The economy is always going to outperform. The stock market is always going to go up. The banks are just going to get bigger and bigger. They're buying up the world. Well, they're not in that top 10 list today. Take a look at the internet bubble. You talk about Apple today. But back then, we had another couple of manufacturers of mobile phones. One of them was in that top 10 list that you can see here, Nokia. And Nokia
It's still there.
no, it's not in that top 10 list, but it still exists.
Yeah.
But the point is that the companies that dominate at any moment in time, I think, are unlikely to dominate in the future because you get competition, you get competitors that come in. And yes, for sure, if you look at that today's top 10 list, you'd say, well, yeah, these companies, there's kind of a recency bias. We're used to seeing them succeed. We're used to seeing the share prices go up. So we persuade ourselves that this will always be the case. But it isn't. Just look at the history. The competition will come in. They will make mistakes. And somebody else will come along and dominate the index at the next peak in concentration.
I'm totally agree. I just say that these are the comments we have below videos. That people say why I should buy emerging markets, for example. They don't deliver any performance in the last, 20 years, something like that, or 10 years.
Yeah.
Yes, that's true. But if you want to avoid a risk, as you mentioned, technology change, for example, then you can just diversify and must diversify in different asset classes in different regions, because you never know when the tipping point is, and then you have a phase maybe of 10 or 15 years with a downside.
Yeah. I mean, I come back to that Shiller PE chart that I referred to earlier. If you buy an asset when it is low, you get good returns. You get excellent returns. If you buy an asset when it is high, and the US market is high now, it's expensive. And in fact, if we switch charts and look at the cyclically adjusted PEs in this chart, you can see across regions that the US market on a cyclically adjusted PE basis, which is very similar to the Shiller PE, the US market is way above its historical norms. It's close to the historical peaks. It's a bit like India, and everybody loves India because it's been going up. What's not to like? It's been going up. Psychologically, it's always very easy to buy something that's been going up.
Yeah.
Much more, and all you see are the positives. But when something's going down, it's psychologically difficult to buy. You just see the negatives. But for me, that means that you're just buying expensive assets and ignoring assets that are good value. When you look at this chart, the obvious areas where you could pick up bargains are China, for example, where earlier in 2024, the market was valued in the same way as the US stock market was in early March of 2009, when the S&P 500 bottomed at 666. So that's where China had got to. And I think when something is so cheap, there's a good chance that things change and you get a sudden outperformance. European stocks are kind of in line with historical norms. Japanese stocks, it's hard to say because the historical average is so distorted by the bubble. But emerging markets, one of the reasons why emerging markets have underperformed really since 2011, emerging markets was the most expensive region in 2011. And it's underperformed since then because commodity prices have come down a lot. And the reason why it was so expensive in 2011 was because commodity prices, we had this commodity super cycle, which boosted valuations, boosted the currencies. And then since then, we've been unwinding that. But these trends don't go on forever. And the US market, why has it outperformed? I think it is because bond yields trended down over a number of decades. When bond yields are falling, that supports growth stocks. And you find more growth stocks in the US. But we're no longer in an environment of falling bond yields. So I don't think we're going to be in this world where the US outperforms. And by the way, if you go back over a broader range of history that is more than just the last 2 decades or so, you will see that there are some periods when the US outperforms and some periods when it underperforms.
So that would mean, as a tip for retail investors, don't look away. Also look at asset classes that's maybe not had so much performance in the last couple of years, and always focus on diversification.
Absolutely. Yeah. So don't believe that what has just happened will continue to happen. Playing momentum feels good so long as it's working, but as we say, the trend's your friend till there's a bend. And when you hit the bend, it's very painful. Yeah. It's very hard to judge when you're following momentum, when to get in, when to get out. So don't just believe that what's happened in the recent past will always be the case. Take a look at longer histories. And yes, I think from my perspective, with a long time horizon, and it's good to have a long horizon, it's much easier to invest over the long term than over the short term. So with a long horizon, I'm a big believer that at the end of the day, the major determinant of returns is not what I think is going to happen in the world. It is the price that I pay for an asset when I put it in the portfolio. So yes, I seek out those assets that I think are abnormally cheap, and I try to avoid the ones that are abnormally expensive, despite the fact that everybody loves them and everybody's jumping onto them.
Yeah, that was then the point where you should sell it.
Yes.
That would be the conclusion. Thank you very much for the insights. Appreciate. If you could one final piece of advice for a retail investor for the next year, what would it be?
I always think it's a good idea to make up your mind at the beginning of the year and stick with it. Sit back, think about what you're trying to do, think about your portfolio, and don't be chopping and changing. And I very often find that the ideas that I have at the beginning of the year are better than the collection of kind of shorter term ideas that I have within the year. So yes, look to the long term, cut down the trading, don't be chopping and changing all the time, and stick with the cheaper assets. And for me at the moment, within my model asset allocation, the obvious cheap asset is Chinese equities. If that's too adventurous, then I also, like
German
I said,
stocks.
I like industrial commodities as that way of capturing an economic upturn.
You also publish every year 10 special surprises, let me say.
Yeah.
It's a little bit too early. I know that it will come by the end of the year. But do you have one idea which you can share? So what could be a special situation where we don't have on our radar next year?
Well, I think a lot of the things are probably going to be around... I try to be contrarian in these ideas because, frankly, if you're in the mix, if you're within the consensus, you don't gain anything because it's already in the price. And if everybody's wrong, you lose a lot. So I prefer to be contrarian in this list. And so I would say I will be looking for the problems that come, say, from Donald Trump's presidency. And an obvious problem is going to be that bond yields rise and that the dollar weakens because of the fiscal situation, and also because I think that Donald Trump just wants to be controlling the Fed. He wants to have his hands on Fed policy. And so if he undermines or tries to undermine or hints that he wants to undermine the independence of the Fed, when you are a country that relies on the rest of the world for financing, that is, you're playing with fire. So I think that could see US Treasury yields. The term premium has already gone up in recent months. That could go further, and the dollar, at the moment it's strong, but I think it could weaken next year.
Okay. Great, we will see. We will publish also these 10 theses, or what is our?
I call it the Aristotle list. So it's 10 surprises. It's the 10 improbable but possible outcomes for the year ahead, and that will be published in the first week of January.
Oh, perfect. We will write about it. Maybe I will make a video about it, some of them, and if I have a question, I will call you.
Of course.
Thank you very much for your time. I appreciate it, and I hope you had also as much fun as I had.
Fantastic. Thank you very much.
You're welcome.
So, das war der Talk mit Paul Jackson. Ich hoffe, da waren ein paar interessante Themen für dich mit dabei und du hast einen guten Einblick in die wunderbare Welt der Asset Allocation erhalten. Wenn du weitere Fragen hast oder irgendwas kommentieren möchtest, dann nutze gerne die Kommentarfunktion. Ich bin schon sehr gespannt, wie euch das Gespräch gefallen hat. Natürlich würde ich mich auch sehr über einen Like freuen und noch mehr, wenn ihr den Extra ETF YouTube-Kanal abonniert, denn dann verpasst ihr kein weiteres Gespräch mehr mit solchen Experten wie Paul Jackson oder natürlich die ganzen anderen Videos, die wir auf dem Kanal hier machen, wenn es um die Geldanlage mit ETFs geht. Bis zum nächsten Mal hier auf dem Kanal von Extra ETF. Ciao.